Good morning, everybody. It is Monday, June 26, 2023. I want to say thank you to everyone who listened to Friday's podcast. I explained a little bit about what's been going on with the podcast, myself, my life, my just views on what I'm trying to do these days. And I got a slew of emails giving me encouragement, telling me personal stories. I'm not going to read any of them here because some people said, actually most people said, hey, this is just for you. Don't read it on air, because I usually read most of the comments about news stories on air. So don't worry, you're safe. I just want to say thank you very much for sending those in, which inspired me to come on today and give you some daily news. Let's get into it. Crypto-based investment products, they hit their record in a single week of inflows. And this is the most we've seen since July of 2022. And this is according to CoinShares. How much money came into crypto? Well, about $199 million, with the majority, the vast majority pouring into Bitcoin. 187 million poured into Bitcoin. With these new inflows, the total crypto investment assets under management surpassed $37 billion. The biggest winner in the United States was ProShares Bitcoin Strategy ETF, ticker BITO. They saw the largest inflows in the United States with $60.4 million. That pushes them to $1 billion in total assets under management. So why is this all happening? Well, it's because of the BlackRock's so-called ETF application. If you want to know more about that, check out Friday, June 23rd's episode, and it goes through the 101 of that application. So if you live under a rock, maybe a BlackRock, you ask, why did BlackRock move the price? Because it's freaking BlackRock, and BlackRock is the world's largest asset manager with over $9 trillion, and I can't get the right price of how much assets they have under management. I've seen 9 trillion, I've seen 9.5 trillion, I've seen 10 trillion. Long story short is they have a lot of money under management. And also, they have an amazing track record. They've applied for 576 ETFs. Only one has been rejected. And again, if you want to know why that was rejected, go back to Friday's episode. I tell you about that as well. And if you think BlackRock's entrance into the crypto space is the only thing that it's hyping, let me tell you, it's trickled down. The number one trending collection of NFTs on OpenSea right now is, you guessed it, a frickin' BlackRock. Yes, just a BlackRock is trending on OpenSea right now. 27th in volume for a frickin' BlackRock. And I'm saying frickin' because I said it so many times. I just want to make sure everybody doesn't have their kids in their car wondering why you're listening to such a vulgar person talking about BlackRocks. Moving on to other news. There's been a proposal by the Ethereum developers to up the stake needed to be a network validator on the Ethereum network from 32 to 2,048. There are currently 600,000 active validators on the Ethereum network, with 90,000 waiting. Timmy Boy Copeland, he tweeted, the benefits of this could allow for fewer validators and could let rewards be more easily compounded. Adam Cochran, he tweeted a reply to Tim Copeland. He said, this doesn't help the network, lowers the total validators to pull from, and equals lower redundancy. It means staking shops will pull more ETH on a single validator, higher slashing risk for users. Only benefits the wealthy staking services and no one else. Well, that perked up at Late Tot, and Late Tot replied to that saying, it does help solo validators. You would have to run a single validator for years before you earned another 32 ETH. With this change, compounding becomes instant and enables you to compete better against pools. For me, the general rule of consensus mechanisms is the more the better. So yes, you might be able to earn some more money, but I, for one, won't be able to run a validator node. I do not have 2,048 ETH. I don't know if you do. If you do, good for you. But for me, the more validators, the better. Moving over to Belgium, the Belgian Financial Services and Markets Authority, or the FSMA, has ordered major cryptocurrency exchange, you guessed it, Binance, to stop offering crypto exchange and custody wallet services. They are saying that Binance was violating the Belgian laws and anti-money laundering and combating financial terrorism acts. And I'm telling you this news because Binance is really under some scrutiny by countries all around the world. Are they going to make it out of this alive? We will see. And finally, in headlines today, a recent wave of bomb threats across the United States have been targeting grocery store operators like Kroger, Whole Foods, Walmart, and this was reported by the Wall Street Journal. An employee from Kroger received a call who asked them to wire money and said that the bomb will go off if they didn't and if she called the police. A Whole Foods employee received a call that a pipe bomb has been placed in the store and demanded $5,000 in Bitcoin. Now, to be honest with you, this isn't really news, but I want to let you know it because it's only a matter of time until this is worked into a narrative, and it forgets that people are also asking for cash, and this narrative just paints Bitcoin as the culprit, and they just start saying that people are planning bombs and asking for Bitcoin, further demonizing Bitcoin. Just want to put this on the record there. They're asking for cash. They're saying, wire me money, but just give it a little bit of time, and it's going to turn into a Bitcoin story and demonize Bitcoin. Let's take a look at those crypto prices.
Here comes the money.
Here we go. Money talk.
Bitcoin is sitting at $30,332. It's down 1% in 24, or up 15% in 7. Ethereum's at $1,880, down 2% in 24, still up 9% in 7. Tether's number 3. Binance is at $337, down 1% in 24 and down 2 in 7. Binance is down pretty much the whole past couple weeks. They're not having a good go of it. And USDC is number 5. Rounding off the top 10, we have XRP, Cardano, Doge, Solana, and Tron is number 10. You're probably wondering where the rest of the guys are. Well, Litecoin's number 11, Polkadot's number 12, Matic's 13, and Matic is not having a good go of it as well because, well, everybody's calling Matic a security and shying away from there. I'll tell you my story about that tomorrow. But until then, happy hodling, everyone.